Hello, everyone. As we step into this Saturday, November 29th, 2025, it's time to take a closer look at the chaos and opportunity left behind from yesterday's trading session. DataVault AI Inc., trading under the ticker DVLT, is currently at a pivotal moment that could redefine its trajectory in the micro-cap tech and cryptocurrency space. Last week, DVLT closed at $2.03, down 10 cents, roughly a 4.69% drop on the day. Though the market is now closed for the weekend, after-hours trading saw a slight further decline of 0.49%, suggesting a theoretical Monday open near $2.02. At first glance, such a percentage drop might make it tempting to conclude that bearish sentiment has taken over completely. It's easy to assume that a nearly 5% decline signals that sellers have seized control, but that's a simplistic reading of the situation. What we're witnessing isn't just a straightforward sell-off, it's a far more nuanced event. A recalibration of the company's valuation driven by one of the most aggressive capital restructuring moves seen in the AI microcap universe this year. On the surface, it looks like DVLT is sliding, but the underlying reality is more compelling. The company is actively reshaping its balance sheet and strategic positioning, moving from a pure-play data monetization firm toward a hybrid model anchored in both AI-driven data services and a Bitcoin-backed asset structure. The market is struggling to price this new dual nature correctly, and that's creating significant volatility. Looking at Friday's intraday trading action tells a vivid story about investor psychology versus institutional execution. DVLT gapped slightly higher at the open, hitting $2.11, and by 10 a.m. surged to a high of $2.24. This morning, spike appears to be driven largely by retail traders reacting to news of the SELEX deal and the Bitcoin acquisition. On paper, it has all the hallmarks of a bull trap, a rapid ascent designed to lure in liquidity before larger players begin to offload. By noon, the stock had fallen to a painful low of 1.94, a 30-cent drop in just 2 hours, which for a $2 stock represents extreme intraday volatility. But here's where things get fascinating. The stock didn't linger at 1.94. It rebounded to close just above the $2 mark at $2.03, hinting strongly at a robust support level forming at that psychological boundary. Someone, or some entity, stepped in to absorb selling pressure at the lows, demonstrating that smart money is actively managing this volatility. This tension between morning exuberance and midday capitulation is precisely where opportunities exist for perceptive investors. Much of the chatter in retail forums this weekend centers around one fear: dilution. Investors have seen filings indicating pre-funded warrants for over 260 million shares and jumped to the conclusion that DVLT is about to flood the market with stock, watering down existing holdings. The fear is textbook. With more shares entering the market, each share's value declines, which naturally drives panic. But that's only part of the story. While dilution is real, what the company received in return is equally, if not more, important. The capital raised wasn't for mere operational expenses. It came in the form of approximately 1,237 Bitcoin. By tying a portion of the company's book value to Bitcoin, DVLT has effectively transformed part of its equity story into a net asset value play. If you're a believer in a crypto supercycle, DataVault now has an additional layer of intrinsic value beyond its earnings. Here's the contrarian perspective. The market may be overestimating the negative effects of dilution while undervaluing the Bitcoin assets. The dip to 2.03 could be an overreaction, an indication that the market hasn't yet reconciled the company's new hybrid valuation model. Zooming in on Friday's price action reveals more insights. The slide from $2.24 to 1.94 wasn't linear. It cascaded in waves, suggesting a classic stop-loss cascade. Traders who bought earlier likely placed stops just below $2.10 and $2.00. Once the price pierced $2.10, automated orders triggered sequential selling, driving the stock lower. Yet the recovery back to $2.03 indicates that smart money was waiting to buy precisely in that sub-$2 zone, capitalizing on retail panic to accumulate shares at a discount. Another important point: the volume during the recovery from 1.94 to 2.03 was steady, not frantic. This implies deliberate accumulation rather than desperate short covering, indicating a structural layer of support forming at $2. We also can't ignore the role of short sellers. In small-cap tech, short sellers are aggressive predators. DVLT, having seen a nearly 5% decline on Friday, is likely on their radar. Short interest tends to spike when there's recent dilution news and a high float as traders anticipate the share supply overwhelming demand. Keep an eye on borrow fees on your brokerage platform. If DVLT borrow fees climb above 20% or 30%, it signals shrinking availability of shares to short, setting the stage for potential short squeezes. For investors holding the stock, patience is key. Avoid chasing morning spikes. Friday's rise to 2.24 demonstrates how misleading intraday highs can be. The actionable approach is to watch the 1/95 to 2.00 zone closely. If this level holds early next week, it could form a double bottom support structure. If broken, expect the next technical support closer to 1.75. Now let's step back and consider DataVault's broader business evolution. Traditionally, DVLT has focused on data monetization, credentialing, and what it terms acoustic intelligence. The company holds patents for data packet verification and secure identity tracking, aiming to create a marketplace where data, both personal and enterprise, can be valued, monetized, and verified. As AI-generated content and Web 3.0 adoption increase, secure data verification becomes exponentially more valuable. However, the recent headlines overshadowed this core business. The SELEX deal represents a historic turning point. Closing the second tranche of this equity financing brought in roughly 1,237 Bitcoin, financed through the issuance of pre-funded warrants for over 260 million shares. Investors are grappling with how to weigh the value of the Bitcoin treasury against the dilution effect. Essentially, the market is attempting to calculate a new equilibrium, a balance between asset value and expanded share count. Digging further, DataVault is exploring real-world asset tokenization, digitalizing physical commodities like copper and gold for transparent, instantaneous trading. Success here could position DVLT as a critical infrastructure provider for future global commerce. But these deals are complex and long-term. The market's impatience, combined with daily Bitcoin price swings, creates extreme stock volatility. In essence, DVLT now behaves like a crypto proxy intertwined with an operating software business. When Bitcoin rises, DVLT could follow. When Bitcoin drops, DVLT likely suffers. Looking ahead to the remainder of 2025, DVLT's path will depend on the market's response to this new hybrid model. Investors must balance short-term volatility against the long-term potential of a company that now straddles AI, blockchain, and digital asset finance. The stock's stability around 2.03 indicates a floor grounded in tangible digital assets, while the evolving RWA, real-world asset platform, suggests untapped upside for patient, informed investors. So, here's the big question for the community. Do you see DataVault AI's pivot to a Bitcoin-backed treasury as a brilliant hedge against inflation, or as a distraction from its core business metrics? How many shares are you holding, and at what price point would you consider adding or trimming your position? Drop your thoughts in the comments, because this story isn't just about a stock price. It's about a micro-cap tech company experimenting with a transformative financial strategy that could set a precedent for others in the AI and blockchain space. In conclusion, DVLT is far from a typical small-cap tech story. The blend of traditional data monetization, Bitcoin treasury assets, and long-term real-world asset tokenization makes it a hybrid investment play. Understanding the interplay between dilution, accumulation, and institutional behavior will be crucial for navigating the volatility ahead. Pay attention to support levels, watch short interest, and stay aware of how the market is recalculating the company's worth. For anyone willing to study the patterns carefully, the story of DVLT is one of both risk and potential opportunity, a narrative where understanding the mechanics of market psychology could provide significant edge in the weeks ahead. This is not financial advice.